Hello and happy Friday. We're back at it again.
Happy Friday.
Robert Morales here with the RCO Network with my co-host, Mr. Francisco Ayala.
Happy Friday. Thank you for having me.
Hey, that's what we're here to do. So we're here on the show today on Friday to bring you your latest. It seems like on Friday we have this offshoot in the market, in the stock market, where people are just selling off before the weekend, and it's just kind of weird that every Friday there seems to be like a sell off and then a rally on Monday. I don't know what that is. I don't know if that's your experience, sir, but
It is. It's something that we see. Basically, people don't want to go into the weekend with having all this stuff in their head, right? They want to be able to enjoy the weekends. It's something that basically something tied to our emotions, of something that we don't want to be worrying about over the weekend. So might as well get out of it. We don't want to worry about it over the weekend and have fun, and then we'll go back at it on Monday. So yes, we definitely see that.
I know. I was joking around with my brother last weekend. He bought Apple stock when it was like $50 a share, and he's got I think well into like 400 shares or something. And
Okay.
I told him that could be your retirement plan. If you want to go out and have a nice dinner, you just sell a share, now, and a couple $100 for a nice dinner.
Yeah, definitely. Yeah, I mean, so actually, it's interesting. One thing that I heard of how Warren Buffett makes decisions, Warren Buffett, a famous investor, and one thing that he does is when he looks at his expenses, if he's going to spend money, you know that he lives in the same house that he's lived for, I don't know how many years, 40 something years or something like that. He's not luxurious at all. This guy's a billionaire, right? Many times over. But what happens is when he sees expenses, he takes that expense and he projects out what that expense, if he invests that money, what that money would look like in 20 or 30 years. And that's how he rationalizes things, right? So for example, if he spends $50 now, well, what is that $50 invested in the market in 30 years? Is that really worth that expense?
Yeah.
So yeah, that's one way to look at it.
And you bring up a good point, sir, because there, in today's topic, kind of, going back and forth with you all week regarding, what we're going to talk about. What I wanted to highlight, I guess, was to break down really three types of traders. So what you brought up Warren Buffett, and he's truly an investor. And I think, when it comes in terms of investments, there's really three types of people. There's the investor, who's more of the long-term person. You got your day trader, who's more of a short-term, like high gains, like aggressive, like sexy stock stuff. And then you got your no investor,
Right.
the people that sit in the sidelines, kind of like wanting to be part of the action, that are like, oh my God, I could have bought GameStop and I could have been a billionaire. Those
Yeah.
people on the sidelines are like, oh, I don't know how to do this stuff. So there's really three types of people out there in the market, correct?
Yeah, I mean, for the most part, yes. I guess. I mean, there's I guess it's a spectrum, right? But we are focusing on these very different types of things, because there are people that are investors that focus on long term, but they also want to play a little bit in the market and the kind of the short term thing. Or people that just jump in and out, right? The FOMO people that they just kind of sit on the sidelines, but then they kind of go in. They're not sure what they're doing, so they go back out. And so very different drivers for these people of why they're in the market, whether it is to make a quick buck, whether it is to build wealth in the long term, or because they're just in there because everybody else is doing it. They
Yeah.
get hear stuff, GameStop recently, and silver and this and that. And so they just don't want to miss out. So yeah, definitely we see a whole spectrum of things, but those are probably, the ones that stand out the most.
Yeah, and you're with you're a financial advisor. You're not one of the the PHP, one of those sideline people. You actually work on wealth management, so you're more of the long term kind of guy, right?
Well, yeah, for our clients, definitely. What our clients are looking from us is advice on building wealth. We're not brokers. We're not traders. We've been exposed to them. We have a lot of relationships with them, but our focus is not on the day trading. It impacts our decisions, and we're well aware of it. Of what these things kind of go on the market, but for the most part, we're not reacting to those things. We're just seeing how they play out. If for some reason some opportunity presents itself, but it has to be again a long-term opportunity because we just don't. We for at least for our clients, we don't dabble in short-term trading at all
And so I just want to remind our
because
audience too.
that's not what they're paying us to do. You know, they're paying us for kind of a more long-term growth.
Yeah, and I do want to remind our audience too that you're Francisco Ayala from the Coleridge Group, and so you develop and I guess grow people's wealth. You manage their wealth acquisition rather than you just go in there quick and day trade. You are a true financial advisor and a fiduciary, correct?
Yes. So we are the company and myself included are fiduciaries because we are investment advisors registered by the state of Arizona. By law, we have to be fiduciaries, and so that's a different standard than the broker dealers where they have the suitability standard and stuff like that. But so for us, it is a more long-term thing of and a fiduciary. The fiduciary standard is a little bit different.
Yeah, and again, since I do real estate too, we are held to that fiduciary duty, and I want to peel that back to what today's topic is to address those three types of people. And when I talk about day traders, those again the people that are in the stocks are in the sexy kind of like aggressive earning environment, like I'm going to make $500 a day. Or 5,000, or
Right.
I'll shoot for $1 million today. Why not? Versus the investor who's more the long-term thinker. I better not buy that GME stock because I've seen this story before, so I better hold on. And then I think for a lot of people out there who aren't in the stock market, who aren't investing per se, probably are invested in the stock market in some way or invested in their investment because a lot of people do have 401ks. They do have, part of REITs, whatever their retirement structure is, wherever they're employed at, they may not manage it, but somebody's doing it for them. Right.
Right.
And so I did want to touch upon that a little bit more because fiduciary means that you are after somebody's best interest.
Well, yes. I mean, that's not to say that you can't be a fiduciary and still do short-term trading. You can still do that as a fiduciary. However, you now you start getting to more questionable of is that really in your best interest? I mean, is getting in and out of the market, which first of all, it's hard to do to make a profit consistently. You could get lucky and making a profit once, twice, maybe you're in a streak and you do it 5 times, right? But to do it consistently, day in and day out for a living, that's very hard to do. And so for us to be able to do that for our clients, I mean, it's not that we don't get into certain positions and get out relatively quickly, not day trading, but relatively quickly in weeks or months or something like that if we see something. But to be able to meet that fiduciary standard, yeah, you really have to be careful about why you're doing these kinds of things. Now commissions and is not so much of an issue because a lot of these broker dealers they've done away with commissions. Yeah. That's where you're seeing all this interest in day trading, because before, when you had to pay $4.95 a trade, $8.95 a trade, and stuff like that, that's money that adds up, right? If you're getting in and out, spending a couple $100s just on commissions, that was holding people back. But now that it's zero, and that they have these stock slices that they call them, right, where you can invest, $5 and buy a share of Apple, not a share, I'm sorry, a percentage of Apple, a percentage of the share, a portion of the share, or some other higher costing shares, then that makes it a lot easier for these day traders and short-term traders to be going in and out. That's what we're seeing of all this mass of people. And again, you hear about it, you read about it, they have nothing better to do, right? Or they're working from home, they have plenty of extra time. So that's why they're getting in here. But so going back to your question, yeah, I mean, you could still do some short-term trading and still be a fiduciary, but it's again, it's harder to say that that's doing something like that consistently is in the client's best interest.
So how many GameStop stocks do you own right now? That was a trick question. You don't have to answer that. I own zero. I was
I did not get
tempted.
into
I was I
that.
was tempted to get in that game. Man, and then all weekend, this weekend, I was looking at silver. I'm like, I don't know which one to get into, and I'm like, I better just stay out of it.
Uh-huh.
So again,
Yeah. So I mean,
I wanted to break down again
go ahead.
those.
Go ahead.
I wanted to break down those three again. You know, again, we have day traders, people who are in that quick and easy, that high gain. You have the long-term investors, and you have the no vestors who I think are ignorantly invested in the stock market, but aren't actively kind of managing their own portfolio. And that's what you help with, right, Frank?
Yes, that's something that we definitely help with. Again, I mean, but we're not just investment advisors; we're also financial planners. So we kind of take a more comprehensive approach to just financial well-being, right? Yes, investing is part of it, and that's the sexy part, like you said, right? Everybody's talking about investing. Everybody's talking about the sexiness of the markets, and I make gains and stuff like that,
Yeah.
because that's what's emotional to them, right? The gains and the losses and stuff like that. When you talk about the other things of financial planning, oh, you're paying your debts and stuff like that, that's boring stuff. Nobody wants to talk about that. It's the investing that gets people interested, and more importantly, it's the short-term investing, because those are very strong emotions, and the highs and the lows of the day. So that's what people focus on. That's what captures the news. That's CNBC stuff, that's Bloomberg stuff. They're just talking about the traditional investing of buying and holding. That's boring. I mean, that's probably, for a lot of people, that's probably the way to go. You buy something, you hold it for a long time, and you make your money that way. But it's boring. What's sexy about that? Nobody wants to talk about that. Oh, I made 10% this year and 10%, nice and steady flow and stuff like that. It's not the 30% jumps. I bought it with options, and now I'm 5,000% up and stuff like that. So
I know I bought some Kimberly Clark stock before they announced
KMB.
before they announced their annual report. I bought it Sunday night, in the anticipation, like, and if anybody knows Kimberly Clark, they sell toilet paper and
A
Kleenex
lot of
products.
household product. It's yeah, right. Consumer staple company, right?
So I'm always kind of thinking, what's the next kind of stock that I'm gonna kind of win at, or at least take advantage of, and thinking like, okay, we're still in a pandemic, people are still going to need paper products, and I just saw there was a shortage too. Um, Taking the chance that they would have a positive annual report, and they did. They came out Monday. The Monday was the first run. I think there was 2 Mondays ago was the first run of reports, and I made $2. I made $2 a share on them, about
There
50
you go.
shares. And I think
You're on your way, man.
I was like 2% return, and I was like happy with it. But that's not necessarily what people want. They want like the GME, shit, I made 500% today.
Yeah.
I'm gonna gross $1 million in a week. And so that's
but yeah, I mean, to be honest with you, the people that are getting those 1,000% returns, 5,000, stuff like that, they're not buying shares. Okay, they're buying options. Options is a way to buy shares at an exponential leverage. Okay, and so because it just takes a couple of cents, or depending on the option that you buy, but it takes a couple of cents or a couple of dollars to buy a share versus games, the share itself, which may be trading at $15 or $17. What I know it's over 100 now, but back then, so they were buying options. That's how you get those 1,000, 2,000, 3,000% gains, right? By buying those options, leverage kind of stuff, buying on margin,
So how much silver did you buy this week?
But
I'm trying to get the
a big
inside.
fat zero, man.
I'm trying to get the inside track on it. Just kidding.
Yeah, no. To be honest with you, it's something that I do for my personal accounts very seldomly. I don't really do a lot of day trading. I just don't have. First of all, don't have time. I have family. I have kids. I have work, and so not a lot of time to do that kind of day trading stuff. But also because I'm not just a big believer that you can do it successfully over and over and over. consistently. Again, you could get lucky a couple times, in a row, and that's not statistically significant. It's just it's a matter of chance that that happens. But to be able to do it consistently, that's very hard. It's not that people can't do it; it's just very hard for people to do it.
And I think that's why people refer to the stock market as gambling and as a big casino, because again, you can have really high gains one day, and that's what people hear. Especially people around here. My office is here at WorkCuity. A lot of the guys here will talk about trades, and I bought some Palantir stock because of some of the guys like, hey, you should really look at Palantir. It's a really good company. And so I looked them up. I mean, they're government contracted, stock. They do a lot of security stuff for IRS and stuff. And it was at $23 a share, I think, back in November. And I said, I'll look at it. So I ended up buying, 45 shares of it just on the chance, because I didn't really know the company. They IPO'd back in September. And I think they're up to $33 a share now. So I'm up like 50 some percent in that stock. And so I was kind of excited, but that's what a lot of people want. They want that kind of quick gain. So
yeah, I mean, so this conversation kind of brings up a good point about going to get nerdy here a little bit.
Oh shit!
It's about the efficiencies of the market. How efficient you believe the market to be. Okay.
Yep.
And so there's a couple of theories about this. So obviously, we have the technical analysts who look at charts. They're looking at those graphs and stuff like that, and the lines and the moving averages and stuff like that. They believe that they can spot patterns and they can make money off of those patterns, those price patterns, those price and volume patterns, and they believe that they can spot those trends and be able to catch them quick enough to be able to make money off of it.
Yep.
There are other people that don't believe in that they're thinking that the market is a lot more efficient, that once news about about the company is available, that it's immediately incorporated into the stock. And so there's no way that you can be able to act on it beforehand, right? So for example, like your comment about Kimberly-Clark. So you're saying that you bought the stock because there was going to be a quarterly report on earnings in a few weeks or a few days or something like that.
Correct.
If you believe in an efficient market, that earnings report is already incorporated pretty much. You have analysts who are projecting what the company is going to do, and are they going to be pretty close to that or stuff like that. So all that information has already been discounted into the price, right? And so it just depends on what you believe. Are the markets efficient? Are they inefficient? Personally, I believe they're pretty efficient. I believe that everything that is pretty much known is already incorporated in the stock price, right? There are very few exceptions where a very unexpected thing comes, and that can really move the stock price up or down. But for the most part, I believe they're pretty efficient. Now, they're not fully efficient, and so that's where a lot of people can make money, because for whether they get lucky or they do have more insights, they can use that to their advantage and act prematurely. But for the most part, their markets are pretty efficient, I believe, where it's very hard to be able to think that something that nobody else knows yet.
Yeah.
If you think you know something that nobody else, that's.
Well, and that's the thing with the market too, is that there's companies that make billions and trillions of dollars, that have more efficient technology, better computers, and can predict a price or make a price adjustment, sell or buy within milliseconds, of the stock change or the price changing, and so I don't believe the average person, on our tier of people, the non-investor and the little guy like me,
Right.
who can predict the stock market. I mean, there's analysts out there that have already enough information and already ahead of, have foreseen the direction of that stock or whatever it is you're trying to purchase way ahead of time. And they already have this game plan, and they're going to execute way faster than you can. I mean, I made a trade on Vanguard for that Kimberly-Clark, and that took a whole 29 hours to submit and actually buy. So actually the stock price went up, I think about 50 cents more than what I thought I was going to purchase it at. So obviously,
Yeah, I mean,
delays.
Definitely, there's definitely. I mean, it's a lot quicker now to get your trades executed. But still, yeah, you're dealing with a lot of algorithms that are predicting these this based on the order flow, right? Order flows of buying and sellings, and the algorithms catch that trend, and
Yeah.
they have like direct access to the stock trading companies, that they're able to front run your order, right? So you buy Kimberly Clark, and you think you're going to get, whatever it is, $50 $50 a share for it, but they'll go in before you, and they'll jack up that price up, and they'll buy it for 50, and then the next one will buy it for 50 and 1 cent and stuff like that. And when you're buying at $50.50, so they already jacked up the price before you, waiting before you even got in. So yeah, there's a lot of high frequency traders that are, that's all they do. Basically, they're not making bets on the stock. They're just waiting for you to place that order so they can get in and make a tiny little bit of a profit from you, fractions of a cent. But if they do that over and over and over and over, that's how they make their money. They make millions of dollars this way, because all they do is just front running your orders. That's kind of the movie of I forgot. They talk about in the Big Short. They talk a little bit about it, but yeah.
Yeah, I think that movie is what people are talking about, just because of the whole GME thing. But I did want to remind everybody in the audience that I'm here with Francisco Ayala of the Callers Group. He is here as as somebody to help you through this process. And if I may give a testimonial, I went through my divorce, and Frank was the first person that I reached out to, and he helped me get started back on track. Because as you could assume, when you have financial difficulties or strains in your life, divorce per se, things get kind of shifted and moved around.
Yeah.
And I know
La-
you have to withdraw money from your retirement account to pay for XY and stuff like that.
yeah,
I've done
we're
that.
painted this story, right, where for especially for financial planning, where you have these certain milestones. No, you're going to get married, and you're going to retire and stuff like
Yeah.
that, and kids and college and stuff like that. Yeah, that's all nice and pretty, and for a lot of people, that's the way it goes. But for a lot of people, you get curves. You get some
Yeah.
curveballs thrown at you, and you get this, and you get, just like you said, you went through a divorce. A lot of people, it's different things. It's illness, it's losing family members, it's a whole bunch of stuff. Being laid off, is opening businesses, it's
Yeah.
good things and bad things, right? And there's always curveballs. And so what I suggest to people is to just be ready for it. Just be ready for it, and to work with a financial planner to be able to be ready for this unanticipated stuff, right? Because the anticipated stuff is easy, right? I mean, yeah, you're going to retire at such an age, you need this amount of money, and college is going to be here, and it's going to be this amount of money and stuff like that. That's easy to plan for. It's the unexpected that is hard to plan for. And were you ready? And how ready were you? Right? And so that's kind of my take on it. Is it's all that unexpected stuff that happens that that can really put you back. They could put you back. You're making great progress, and then it could set you back a couple of years or decades for some people.
Just a quick question. So, do you have any attorneys that do prenubs in your office, or no?
No,
Oh,
we
okay.
don't.
Figured I'd ask. It's a relevant question to the topic. So,
It is, it is, and it's something that we could definitely advise on, as far as, but we're not attorneys, and we're not accountants, and so we can't give any of that advice.
Yeah, no, it's probably best that way. So I did want to reiterate, we're going to be coming to the last 5 minutes of our show today. All the information that we provide here and all the opinions are just opinions. So make sure to reach out to your financial advisor, or Francisco. You can hire him with their Callers Group. If you want to message either him or I, you can go ahead and do that in the comment section below. We'll get back to you with any questions or anything you have. If you like what you're seeing, go ahead and hit that love and like button, because we love the loves here at CEO Network.
Exactly. Yeah. I mean, so basically, my take is, I've been doing that, going at this for 10 years. Right. Actually, more than 10 years. But since I really focused on, getting an MBA, getting a CFA, and here soon, hopefully getting the CFP, it's been over 10 years that I've been doing this. And so I've been gaining all this knowledge. And I just want to be able to share this knowledge with people. I want to be able to answer questions. I'm, no obligation or anything like that. I'm interested in what people want to know, because I've been accumulating a lot of information, and I'd be happy to share it with you with no obligations. And what I want to make clear is that this is done without any agendas, right? I'm not
Yeah.
asking, or neither of us are asking for anybody to do anything. It's just basically we're just trying to provide valuable advice that might be applicable to them or might not, and it's just a way of creating dialogue and creating communication.
So there's a couple takeaways as we wrap up. We're about 27 minutes into it. Can you believe how
Already,
time
Jesus,
just
wow,
boom?
time's flying.
It always does. So
Ah,
the two takeaways.
you're gonna miss my stock tip then.
Oh shit! You hang in there.
Because that's at minute.
If we have time, we can get Frank's top stocks. Hang in there. If you hang into the end of the show, you might just throw one edge. But two takeaways. As I started my kind of investing and trying to educate myself regarding the knowledge in the stocks and in the investment environment. One of the books I picked up was by Benjamin Graham. I'm sure you know, Mr.
You're right.
Mr. Yella, The Intelligent Investor.
Mm-hmm.
And one of the concepts that they talk about in there is patience. That you can't just, if you are a true investor, you invest over time. And those high gains, there's going to be days where you gain them, just because that's the way the market is, but you really have to be patient. In investing, not in necessarily the stock market, but investing in knowing what a company does, who they are, what their projections are as far as their ideology, more so than what their projected price will be. It's kind of the takeaways I got there. And so, that's one book I would recommend. And you can kind of give your take on that when we close, Mr. Yella. But the second part to my closing is, when I was going through, I talked about my divorce a little bit. I reached out to Frank, and one of the best things that I picked up from you, and this is a compliment to you, was that sense of friendship, that sense of like, hey, I'm just here to talk to you over tacos or empanadas, whatever. I call them tacos.
Right. No, they were empanadas.
That you sat with me, and you in my moment of turmoil when things were just like fuzzy up in here, emotions run crazy when you get a divorce, and I'm sure with other things, if job loss, people are experiencing a lot of things. The one thing that I remember truly about you Frank, was that you sat with me and you kind of walked through that process, and you kicked my ass and got me to sign up for Fan Card, and I thank you for that. You should see my gains now. I've gained a lot since that day.
Well, hopefully not pounds.
Well, it's been a year, so COVID. I'm working on it. I'm sorry, I'm working on it.
That's okay. A couple of quick parting thoughts. Something that I do want that hopefully we get into in the next couple of on our next couple of meetings, is to talk about the behavioral approach to this, because money is very emotional. Finances are very emotional, and we incorporate into our decision making, into our money decision making, all of these things that we're wired, and some people are wired differently for these in these decision making things. And so, for example, your comment about making what Benjamin Graham says about learning about the company and stuff like that. That's true, because not just because something is a good company doesn't mean that it's a good investment. Okay, some companies are great companies, but they're not necessarily a good investment because people have bid up their price so much. It's something, again, we'll get into probably in the future. But if you look at their price to earnings ratios, right, where companies might be trading at a 20 PE multiple. Some very good companies that you say, wow, this is a good company making a lot of money, but they're trading at 500 PE multiples, right? And so just because something that is a good company doesn't mean it's a good investment. That's a kind of a distinction there. Then the other thing is, again, just recognizing emotions of why you make decisions with money that you do make. A lot, we get influenced quite a bit, and you hear these stories about GameStop, you hear these stories about a whole bunch of things. And so that kind of tugs at our emotions, and it makes us do things that might or might not be in our best interest, but just to recognize that, I think that's very important.
Perfect. So again, I'm here with Francisco Ayala from the Collards Group. If you want to contact him, you can contact him at francisco@collardsgroup.com. We'll go ahead and put that in the description below for you guys. Again, if you like what you're seeing, and share and comment as you need to, please hit those heart buttons because we love those. But if you have any questions, like I said, we'll get back to you. We'll be doing the show next week on Friday, and waiting for those stock tips. Frank, you ready? What do you think about Palantir? Palantir strong?
Palantir, yeah. Well, we'll see, right?
Oh, shut. Yeah. No stock tips. Huh? That's what everybody's waiting for. Okay, so you'll have to hold in until next week. Frank's going to bring his stock tips next Friday here at the RCO Network. Thank you, sir, and we'll catch you guys later. If you have any questions, again, leave them in the comment section. We'll get back to you.
Thank you so much. Thank you for having me, Robert, and I'm looking forward to next time.
Thank you, sir. Thank you, guys.
All right.